Okay, so ARK Invest CEO Cathie Wood has seen her fortunes rise and fall during a very turbulent period for the stock market. She likely received too much credit when her various exchange traded funds were flying high and has taken too much blame now that they're not doing quite as well. That's sort of how it goes for any high profile stock picker, and it's not at all different from how Warren Buffett, Carl Icahn, George Soros, or really anyone who's gotten famous for being right more often than not when it comes to picking stocks. So this isn't something new to investors. Wood, however, rose very quickly and became a star in the investors community, but people love to see quick falls after quick rises. That's made her a tad controversial, but her new take on holding on to EV stocks should win her some favor with Tesla, Lucid Motors, Rivian, and any other electric vehicle company fans. What she says should also give gasoline car companies like Ford and General Motors a cause for concern and more justification for their efforts to pivot to electric vehicles. Oil demand probably did hit a secular peak in 2019. The supply shock caused by the energy insecurity policies of the current U.S. administration, ESG mandates globally, and now Russia's invasion of the Ukraine has raised prices to a point that will accelerate demand destruction. Now, Wood shared on Twitter that not only has demand for oil peaked, she expects that the ripple effect caused by everything from what the Biden administration has been doing to Russia's invasion of Ukraine will accelerate oil demand destruction. Basically, she pointed out that while oil's days were already numbered, people may be driven to go electric sooner due to the current circumstances. According to Cathie Wood, the accelerated shift toward electric transportation will destroy oil consumption at the margin. Long term, though, longer than I expected, oil prices will collapse under the weight of lower demand. Wood added that innovation solves problems. Not everyone on social media agreed with her, but the tweet was pretty typical of the responses, well, at least the polite ones. We may be at a tipping point when it comes to the demand for electric vehicles. Generally, high gas prices have been good for fuel-efficient cars, and lower gas prices have made people more willing to buy gas guzzlers like SUVs and pickup trucks. Now, instead of buying a small car that uses less gas, more people might be willing to spend the money on an electric vehicle. The problem might be that Tesla, Rivian, and Lucid, not to mention all the other car companies in the EV space, don't have any electric vehicles to sell them. Rivian and Lucid produce essentially no vehicles right now and will ramp up over the years to hit meaningful numbers. Tesla has a roughly 1 million vehicle run rate and might be able to double that. Elon Musk clearly understands the opportunity as he commented on production during Tesla's fourth quarter earnings call. So Elon Musk said that the fundamental focus of Tesla this year is scaling output. So both last year and this year, if Tesla were to introduce new vehicles, the total vehicle output would decrease. Musk believes that this is a very important point that unfortunately many people don't understand. Basically, Musk plans to put all his might to increase how many cars Tesla makes because he sees the same opportunity that Wood does. Tesla forecasts vehicle deliveries would comfortably grow by more than 50% year over year in 2022, despite persistent supply chain issues that it expects to be alleviated only next year. The upbeat outlook from CEO Elon Musk came after the world's most valuable automaker posted record quarterly revenue that beat Wall Street expectations. But the cautious note about supply chain woes showed that even Tesla can't avoid the shortages that were pitfalls for many larger automakers last year. Tesla, which produced a few cars at its Berlin and Texas factories last year, said scaling up production there would depend on supply chain headwinds and the successful introduction of new technologies. Musk said that Tesla wouldn't roll out new models this year, but hopefully would launch its Cybertruck, the Semi, and the Roadster next year. Tesla said it's not currently working on a $25,000 model that Musk promised in 2020 that would launch in 3 years. Now, revenue rose to $17.72 billion in the fourth quarter, above analyst estimates of $16.57 billion. It was the company's second year finishing in the black, but significantly improved over last year's fourth quarter profit of just $270 million. The company ended this year with $5.5 billion in net income compared to $721 million in 2020. Tesla turned that profit on just over $17.7 billion in revenue and did it while its average sales price continued to drop due to the increasing popularity of the more affordable Model 3 sedan and Model Y SUV. Tesla produced 305,840 vehicles in the fourth quarter, a 70% increase over the previous year. For the entire year, the company delivered 936,172 vehicles. That's just shy of the promised 1 million vehicles, but still an increase of 87% over the previous year. Tesla has fared better than most automakers in managing supply chain issues by using less scarce chips and quickly rewriting software. The automaker last quarter handed over a record number of vehicles to customers despite supply chain headwinds. Musk said during a conference call that chip limitations should be alleviated next year. He said Tesla's volume growth would comfortably exceed 50% from last year, meaning that Tesla expects to deliver more than 1.4 million vehicles this year. The automaker said that the goal would be achievable even with current factories at Fremont, California, and Shanghai. Tesla also said its Texas factory will this quarter deliver its first vehicles equipped with its next-generation 4680 batteries made in California as planned. As its new factories come online, Musk said the company was already casting about for new locations. He added that an announcement about additional factories was likely before the end of the year. So 2022 is the year we will be looking at factory locations to see what makes the most sense. Tesla also highlighted its controversial full self-driving product as a primary area of focus. FSD is a beta version of an advanced driver assist system that controls some of the car's functions on local roads but still requires human supervision. In contrast, autonomous vehicles are cars that can operate on public roads without any human intervention or supervision. Still, the company claims that FSD will lead to more profits in the future thanks to the higher utilization of Tesla vehicles. Tesla CEO Elon Musk has said that once Tesla cars are able to drive themselves, the company will leverage that capability into a robo-taxi fleet. The goal is to make it so that each Tesla's customer's car can double as an autonomous vehicle that other people can hail while the owner isn't using it. Well, Musk said he expected Tesla vehicles to achieve full self-driving capability this year. At the moment, humans are required to sit behind the wheel to drive the car if needed. The number of full self-driving beta vehicles in the United States increased to nearly 60,000, up from a few thousand at the end of September. Tesla has been testing the improved version of its automated driving software on public roads, but it has said that the features don't make the cars autonomous. Tesla's $4.09 billion in adjusted earnings before interest, tax, depreciation, and amortization beat the consensus estimate of $3.89 billion. That appeared to qualify Musk for an additional options payout under his 2018 compensation package. That said, Musk was also bullish on the continued improvements to FSD over the course of the year, despite concern from safety regulators that Tesla was testing an incomplete version of its software on customers who lacked the appropriate training. He said that there are several profound improvements to the FSD stack that are coming in the next few months. So if Tesla's 2022 plans become a success, then we should see the automaker's revenue skyrocketing. Well, that's a lot to cover in just a short time. What do you think about all this? Let us know via the comment section. Remember to like, share, and subscribe. Stay safe, and we'll see you next time.